Breaking! Gold's market cap officially hits a record 35 trillion. And silver's market cap hits a record 6 trillion. Gold and silver are now worth 9 times the market cap of Nvidia. For the first time since 1996, the value of gold held by central banks exceeds the value of U.S. treasuries they hold. This is starting to look like a structural super cycle for hard assets like gold and silver and Bitcoin. Silver surged above 109 bucks this morning, and it's now up another 48% in 2026. And we have a likely government shutdown on the way, adding fuel to the fire. Gold, as of this morning, hit a new all-time high of 5,100. Oh yeah, the battle for sound money is here. Oh yeah, right. Bitcoin is in decline, bro. Smart money is getting out, moving into real gold and silver, which have been soaring. Well, the gold and silver bulls celebrating Bitcoin's underperformance don't want to mention this. After $10 trillion of stimulus and 9% CPI, gold didn't do anything for 4 years. So a little catch-up for you is nice.
Don't break an arm jerking yourself off.
Somebody's gonna need Tommy John surgery. And sorry to burst his bubble. Bitcoin since 2015 up 20,000%. Gold since 2015 up 300%. Or how about this? This is what gold fans are celebrating, down 99% since 2010 against the hardest money. Perspective is always important. The fiat dollar is dead. Stop pricing assets in worthless toilet paper. Own immutable scarcity. And if you think Bitcoin can't catch up to the world's 2 most valuable assets, you're not paying attention, because the Fed is preparing to sell US dollars and buy Japanese yen for the first time this century. And the last time the Fed directly intervened with the yen, it crashed the dollar by nearly 50%. And the last time the carry trade unwound, Bitcoin suffered a 29% crash, followed by a 100% pump from 54K to 108K. So yeah, it may feel like they massacred our boy. Bitcoin's being held in place, but it's about to break. And when it does, it's gonna be violent. History doesn't always repeat, but it does rhyme. And something wicked this way comes for the dollar. You couldn't ask for a better setup for Bitcoin than this right here, right now. When the dollar slips, Bitcoin rips. And they're about to print so much money, it'll make your eyes bleed. That's right, we're choking out the bears and preparing for Valhalla. Make no mistake, we will have our revenge. Welcome back, I'm Rustin, and we have a massive show today. Send it!
Yeah, it's worrisome. You know, the Fed basically has become now just a giant hedge fund. It's lost $1 trillion, you know, and counting. It's going to be a gigantic loss. What it does is borrows money at 5.4% from banks and then dumps it into government bonds. So think what that trade does. That causes the government to think that it's better off than it is. And so that encouraged the government to be short when rates were zero. So why did the government, borrow so much in T-bills? Well, because the Fed was buying the bonds, and it made it look like yields were going to stay low for remember the low for long phrase. So we've got these multiple problems that are going on, and it endangers the dollar. So that's the basic case.
Instead of the Fed having such large balances, wouldn't the private sector be starting businesses and risking capital and bringing returns and adding to growth? Wouldn't all that money be better if it wasn't with the Fed?
That's right. And we're depending on private equity. So as the banks get squeezed out, because they're lending so much to the Fed, it's literally a floating rate loan from banks to the Federal Reserve so it can buy government bonds. So if that were freed up, that would allow the banks to at least consider a small business loan and inventory loan, the kinds of things that help the economy grow. And this is on a global basis. It's not just the Fed. It's all the major central banks doing the same thing, meaning taking money from the economy in order to buy government government bonds. We need to be clear on that. I heard the previous segment, they talk about money printing. There isn't any money printing on it. It's just money borrowing, and they pay top dollar for it. The Fed pays 5.4 to banks and 5.3 to money market funds, so to the Fidelity and Vanguard and so on.
You think that
Absolute insanity! A former World Bank president just admitted the Fed has lost over $1 trillion and counting. The Fed is borrowing from banks at 5.4%, then recycling that money into government bonds to fake stability. They're not managing an economy. Have you looked at the economy? They're running a leveraged hedge fund. And this isn't just the US, it's happening globally, especially in Japan. Breaking, the Fed is preparing to sell US dollars and buy Japanese yen. This is rare, and when it happens, markets don't drift. They reprice. Japan is under extreme stress, a weak yen, multi-decade high bond yields, and a hawkish central bank. Japan tried to defend its currency alone in 2022 and 2024. It obviously failed. History kind of shows only one thing works: US and Japan coordination. We saw it in 98. We saw it in 85 with the Plaza Accord when the dollar fell nearly 50% and assets ripped. If intervention happens again, the setup is simple. Dollars are created and sold. Yen is bought. The dollar weakens. Global liquidity rises. Now look at Bitcoin. Bitcoin has a strong inverse relationship to the dollar and a strong positive relationship to the yen. There is short-term risk. The yen carry trade can force temporary selling. We saw that in August 2024 when Bitcoin dumped down to 49K. But dollar weakness creates long-term upside. Bitcoin is still below its 2025 peak and hasn't fully repriced for currency debasement. If coordinated intervention happens, capital will rotate into assets that are still undervalued. Historically, Bitcoin thrives in that environment. This is all shaping up to be one of the most important macro setups of 2026 and moving forward. I mean, in all honesty, none of us, we're not bullish enough. The Fed is signaling yen intervention just like 1985. And again, last time this happened, it crashed the dollar by nearly 50%. Back then, the dollar was too strong. Exports were dying, trade deficits were exploding. Congress was ready to torch Japan and Europe with tariffs. So the US, Japan, Germany, France, and the UK met at the Plaza Hotel, and they made a deal. Sell dollars, buy other currencies, weaken the dollar on purpose. It worked. Over the next 3 years, the dollar index fell almost 50%. USD JPY went from 260 to 120. The yen doubled. That was one of the largest currency resets in all of history. And when the governments coordinate in FX, markets don't fight them, they follow. A weaker dollar sent gold higher, commodities higher, non-US markets higher, asset prices higher across the board. Does any of this sound familiar? I mean, look at today. The US still runs massive trade deficits. Currency imbalances are extreme. Japan is back at the center of the stress, and the yen is weak again. That's why Plaza Accord 2.0 is even being discussed. Last week, the New York Fed ran rate checks on USD JPY, the same signal we saw before intervention in 1985. No action yet, but markets moved anyway because they remember, if this starts again, every asset priced in dollars reprices higher. And in case you didn't know, American money printing is going exponential.
So what you have here, Dan Oliver runs Murr McCain Capital. All credit to him. This is his chart, not mine. But I read it and saw this nails it. So in his title is American Money Printing Goes Exponential. And the chart starts in 1960. The lighter gray sloped line, that's kind of a growth curve, pretty much tied to the growth of money supply. It's kind of 7% compound growth. And as you can see, compound something at 7%, eventually it starts to go straight up, gets kind of exponential. And the black line is the Federal Reserve liabilities, or the Federal Reserve balance sheet, which really is a measure of the reserves that they put into the system, which the banks then take and lend out. And that lending is what creates growth in M2. Okay. So what you can see is that they tracked from 60 to 80, they were together, all the way up to 2000, little blip. But basically in 2008, you can see that the debt kept growing at an exponential pace. And one thing that's not on here, I kind of wish it was, is the overall level of debt in society, because the debt level in society would kind of track the exponential growth curve. And, the debt kind of got ahead of the balance sheet in '08, and we had a panic, and boom, they printed. And you can see it went up quite a bit from, I think the Fed balance sheet was 850 pre '08, and it topped around three something, 3.5, I think, at the top. And then, of course, Yellen and Powell tried to reduce it, and they did start reducing it. But you can see the second arrow right there. The repo COVID panic was 2019. New York repo rates blew out, went up to 10% overnight, and that was the first Powell pivot. And so Powell, at that point in time, basically said, "Hey, we can't keep tightening. We've got to loosen. In fact, we got to do QE." And then, of course, COVID hit, and then all hell broke loose, and it went straight up. And of course, that's what created the 9% inflation peak that we had. And so he immediately, eventually he figured out, and he said it was transitory. He was wrong. I mean, that's what happens when you have a lawyer as your central banker. I mean, you can blame a lawyer for not understanding it. I mean, the one who should have understood is Yellen. Anybody, I mean, we grew, when they did this thing, basically they grew M2 by 40%. So you can't grow M2 by 40% and think you're not going to have inflation. I mean, I was just, what were they smoking? So, right. But then he started tightening again. But here, notice this, so they tightened, and they came from the peak of 9. Now the balance sheet say 6.5. Okay. But look at how the interesting point is every time the money in the system, the black line, dipped below kind of the growth in debt line, the exponential growth in debt line, a problem occurred. Well, look at where we are right now, right? So, so what do you think is going to happen next, right? I mean, the black line is about, and the black line is turning up. This doesn't reflect the December, change policy. So, you just know what's going to happen next, right? This black line's got to go north of $10 trillion, and it will, in my opinion. This isn't just my opinion. This is kind of a mathematical fact. I mean, they could not do it, and in which case, the debt would start to default and everything would start to collapse, and we'd have a deleveraging cascading cycle that would look like 1929, and that would be extremely unpleasant. And if they choose to go in that direction, so be it. I'm making a strong bet that they will not choose to go in that direction, and I think it's a logical conclusion that they won't. But I suppose they could, right? That's a tail risk on to the debasement trade that we're all in.
Like Larry said, it's just math. And here's some math. The US dollar accounted for 65% of global foreign currency reserves in 2001. 25 years later, it now only accounts for just 40% of those reserves. Do with that information as you wish. But everything happening right now is an indictment of fiat. Gold, 5,100. Silver, 109. These charts aren't bullish. They're completely unhinged. Markets aren't pricing a recession. They're pricing a collapse of trust. When gold and silver move like this together, something has broken. Silver is up nearly 7% in a single session, violently trying to catch up to gold. People aren't buying metals because they want to. It's a shiny rock. They're buying because they're scared to hold anything else. And here's the part nobody wants to talk about. The price you see on screen is paper. Physical silver in China is $134 plus. In Japan, $139 minimum. That premium is unprecedented. As equities bleed, funds will be forced to liquidate metals short-term to cover losses in tech and all the AI junk. And after that, higher. The Fed is officially trapped. Cut rates to save stocks. Gold goes to 6,000 as inflation explodes. Hold rates to save the dollar. Housing and equities collapse. There is no good outcome for fiat. But when it comes to Bitcoin, all of this is rocket fuel. And according to Max Kaiser, it could send Bitcoin to 10 million cuckbucks. We're about to bring it home, but before we do, look at our likes.
3 or 4 times, maybe. I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a moment to recognize our sponsors powering this show over at the Bitcoin Way. At the Bitcoin Way, they'll walk you through all things Bitcoin, like it's kindergarten with Satoshi. From setting up your first wallet to running your first node and so much more. No tech skills needed. The Bitcoin Way has got you covered. You want $1 million Bitcoin? Better act like it. Self-custody is not optional. That is the revolution. Schedule a free 30-minute consultation with the Bitcoin Way today using that link in the show notes. Today's show is brought to you by Ledn. If you ever need cash without selling your Bitcoin, Ledn makes that possible. The global leader in Bitcoin-backed lending, Ledn has issued over $9 billion in loans since 2018, and they have a perfect record of protecting client assets. No credit checks, funds in less than 6 hours, no monthly payments, repay whenever you want with 0 penalties, and proof of reserves reports, verified by a top accounting firm, are published every 6 months. Ledn gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. Learn more at learn.ledn.io/simply. That's learn.ledn.io/simply.
Remember, World War II was the result of the reparations Germany had to pay after World War I. Well, the America and the UK are facing the same problem. They're paying reparations to the banks and the private equity groups that have stolen all the assets and replaced it with debt. Right? They're off on their yacht in St. Bart's on a 300 and 400-foot yacht, but all that money came out of extraction from ongoing enterprises, leaving debt in its wake, and now nobody can pay the debt, so they're going to go to war, or they're going to try to confiscate. Well, Bitcoiners are looking at this and saying, our assets can only go up in value in this scenario, and it's unconfiscatable. So on one hand, I hate to see this type of conflict coming. But on the other hand, I'm conflicted because I know that means my Bitcoin's going to $10 million a coin.
When you see this, we shouldn't feel fear. We should be watering, foaming at the mouth, because this is the arbitrage of the century, an opportunity of a lifetime. And when the state does what the state does, well, there's no bigger you than freedom money and separating money from state.
The states will disintegrate because states don't have any Bitcoin, so they will disintegrate and they'll go to war with each other. I was speaking with a gentleman last night from Pakistan, and Pakistan and India recently got into a bit of a kerfuffle, a jet fight in the air. Mm-hmm. He was saying, well, the Pakistani jets cost us like 50 million and their jets cost 250 million, and we shot down their jets and our bombs are 50 million. And I said, let me explain to you how a Bitcoiner sees this. A Bitcoiner looks at you, two countries going into debt to buy weapons to kill each other, which you then have to pay for by printing more money or borrowing more money. That means my Bitcoin goes higher. So, I could try to get you to buy Bitcoin and save you, but I'm conflicted, because the more you kill each other, the more my Bitcoin is worth. So, I'm conflicted. And you want me to help you, but you have to bottom out in the fiat money world. You have to bottom out on warmongering. You have to bottom out on your religious nonsense, to accept Bitcoin. If you're not going to, I don't care, because you're just going to print money to add ad nauseum to infinity. And it just means Bitcoin goes to keeps going higher and higher. So, we'll see. The solution is here for you, but if you don't want it, I don't care.
The trap is set. The Leviathan is walking right into it. And Bitcoin is ready to disembowel and desecrate fiat on the altar of sound money. Fear not, my friends. Our revenge is nigh. And the possibility of World War III is higher than ever, which is probably a good time to visit our new sponsor, Sat123. Because when cell service dies, life doesn't have to. Sat123 hooks you up with real satellite phones, Starlink kits, and rugged off-grid internet that works anywhere, mountains, ocean, middle of nowhere, it doesn't matter. If you care about preparedness, freedom, and staying connected when it actually counts, go to sat123.com. That's sat123.com, and don't forget to use promo code SIMPLY for 15% off. No signal? No problem. Hope you guys enjoyed this one. Let us know what you think below, and don't forget to like, subscribe, and give us a pamp. Share the Sound Money Gospel, and I'll catch you all next time. Love you guys. Peace.
If you prefer to go down with the ship, you.